Bank statement loans. Bank statement loans are bank statement loan is a way to purchase a home using your bank statements. And the way we do that is by looking at your deposits in your bank account. So typically what would happen is we would have a self-employed person who's had their company more than 2 years. That's 100% owner of the company. We look at the business bank statements and we add up all of the deposits and then divide that by 24 and assign. And then once you have all of the deposits, then you have to prepare a profit and loss, which would usually be 20 or 25% of the total deposits. And that's what you would use for qualifying income for someone to buy a house. Usually the bank statements are from one Schedule C, sole proprietorship, or from one corporation. It's preferably one bank account. We just did a transaction where we had 2 corporations and 4 bank accounts, and that was extremely challenging. Bank statement loans can be very challenging just because of the cumbersomeness of the nature of that loan. I mean, I know my business bank account has millions of dollars streamed through it every month and is 50 pages long. Just kidding. I don't have millions going through my bank account, but I do have money going through my business bank account, and it's like, I don't know, 15, 20 pages long. So if I had to go take each bank account and put in in the spreadsheet the deposit for 24 months, that's a bit of a chore. And then any odd deposits, anything out of the ordinary, let's say I'm depositing, I don't know, $2,000, $2,000, $2,000, and then all of a sudden I deposited $30,000 or $40,000. Well, they're going to look at that as kind of like a red flag. Where is this money from? So it's a little bit different. Let's see, let me pause this music. Whenever I'm evaluating these programs for clients, it's kind of like you take it old school a little bit, because there's so many different ways that you can go, and usually you need to put about 20% down. That's like very typical, 20% down. They have some programs out right now newer programs where you can put 10% down. Your credit score could be as low as 620. But that's not the norm. The norm is you need a 700 FICO. You're putting 20, 30% down. You're a pretty high qualified borrower. You've got assets in the bank. You need reserves. Your debt ratio is around 45. So that's the typical profile of someone that's doing a bank statement program. Not everyone fits a specific mold. And that's where lenders' ability to be creative and structure a file will come into play. That's where I have success with my files, as opposed to someone that's been turned down. It really just kind of comes down to structuring, really getting the thick of it, knowing and understanding guidelines, and knowing how to package a file and present it. Right? It's like a lot of things. It's how it's presented. If it goes in a hot mess and it's hard to look at, someone's not going to want to give it attention. So you have to package it neat and pretty. It has to make sense. And overall, I think that if something makes sense, oftentimes you can get it done, even if it's out of guideline. Some things you cannot, some things, if they're calling for 20% down and you only have 17, well, then I don't know what to tell you. You need 20%. But there are other things that you can, vary a little bit, or you could just kind of slide in there. Are you getting ready to leave?
Yeah.
Oh, come over here and say hi, Jocelyn, because you look so cute today. This is Jocelyn, my partner.
Hi, everyone.
So how about that last bank statement loan we did?
Yeah, that was
a lot.
Gnarly.
But we got it done, right?
Yeah.
And there's through determination and being savvy and knowing how to talk to people. Persistence, yeah. And these people were so highly qualified. Like incredibly qualified. But like a lot of self-employed people, they're not necessarily showing all the income. And that's exactly how a bank statement loan can benefit someone is with that. Jocelyn, why don't you, so whenever we do these loans, we'll put together scenarios for them. So why don't you, so we did, okay, what is this one?
This one's a 30-year interest-only ARM.
A 30-year? Not, oh, it is?
Yeah. 5/1 ARM.
Okay.
Interest only.
So a 5/1 ARM is fixed for 5 years and then it goes adjustable. And what was so this particular scenario, this was like a 1.2 million sales price. They put down 25%. So loan amount's like 900,000 and their total payment is how much?
5,358.
Versus 5,700 and 6,400 on these other scenarios. So I was trying yesterday to do a screen share where you could see all this stuff. So this one is, and this is like old school, right? I'm all like scribbling on it or whatever. So this is the 5-year interest-only ARM. It does, these loans aren't free. It's 1.375 points, and the rate on this one is 5.99. So obviously there are benefits to showing your income and W-2ing yourself and qualifying. But a lot of times self-employed people, that's just not how they operate. So on this loan, 5-year interest only, it was $53.58. On this one, what was that payment?
40-year interest only, $57.01.
So we could totally see it though, right? This works. Okay. So on this loan, the rate was 6.5. But it's spread out over 40 years and it is interest only. And so the benefit for this type of loan over the 5-year loan, okay, so one's 57 and one's 53. But on the 40-year, it's going to be like that for 10 years, whereas the 5-year is going to be adjustable. So this is a good loan for someone that's thinking that they're going to go back and do their taxes, right? Redo their taxes and refinance in like a year or two. And then the 30-year fixed, that's just kind of gnarly. It was 64.30, and the rate, does it show the rate? 6.5. So the rate is, those are like 1990 rates, so to speak. What are some things that you like to share about the program?
I mean, like you said, it's a great program for people that obviously own a business and you don't show all your income in your tax returns. And when you're self-employed, you always have those, you have to pay so much taxes just to show the income that you really made. So
right.
it gets very cumbersome to try to buy a house. So if you can't buy a house with your taxes, use your bank statements.
Now, there are some stipulations. You need to have proof that you're paying rent. These investors are taking these loans on and securitizing them with a specific set of guidelines. And so we're finding that it's pretty strict on the requirement that you show proof of payment of your residence. Also DTI. What do you think is the average DTI that we're seeing on these?
For this one, it had to be below, was it 43?
On this one was 43, but a lot of lenders, I think the norm is 45. And this is an area that you can kind of stretch outside of the box, so to speak. When you have a file that's otherwise structured nicely, sometimes you can get exceptions to the debt ratios. There's some other things here. Tell me about the reserves, Jocelyn.
You have to have at least 6 months reserves for this type of loan. So yeah, you'll get approved for it because you have all these deposits, but you still need to have something in your bank account to show that after 6 months, you'll have enough money in the bank to make at least 6 payments.
And Billy Burke, no, it's not a liar's loan. This is a loan where the persons qualifying are legitimately vetted. You have to have a corporation or some kind of a business, and they validate that you actually have a real life business. And then, somebody that's depositing $15,000, $20,000 on the regular over 24 months, I would say that person is a pretty good risk, and they're putting 20 or 30% down. that's a good risk to me. And that's paying, you know, anywhere from 5.5 on the low to 7.5 on the high on rate. So these investors, these are big investors. One of the companies that I'm dealing with, they're getting a lot of their money from Dubai. Isn't that kind of sexy? So there's a lot of investors looking to place money where the return is a solid 6, 7, 8%. And these loans, you know, again, when you got a 700 credit score and you're putting down 30%, you're pretty invested and motivated to perform on that type of situation. I can't think of anything else. Let me see. I thought there were some more things. Self-employed for 2 years, reserves, rental history. Oh, the credit. So obviously, if you're trying to put 10% down and your credit is 620, you need to get your credit in order. And anytime you're going to go buy a house, you're going to refinance, getting your credit in order is paramount. That's like number one. And there are a lot of really simple ways that you can get your credit scores up. But if you're looking to go do a bank statement loan with a 620 FICO, I would advise that you spend 30 days getting your scores up. So you got a 620, there's some pretty easy ways to get your scores up. However, we are doing loans down to a 620. We're doing loans up to 2 million. We're doing credit scores down to 620. Did I already say that?
Yeah.
I already said that. Okay. And bank statement loans with as little as 10% down. So that's pretty sweet, wouldn't you say?
Yeah.
Yeah. And we can close these in 30 days too. So I just wanted to communicate to you all of the opportunities in lending that are out there for the self-employed borrower. I've been working with self-employed borrowers since 1998 and know that I have a really good handle on evaluating their complex income needs. Would you like to add anything, Miss Jocelyn?
No.
No?
She did a great job.
All right. Well, if you're looking to buy or sell in Southern California, pick up that phone and give us a call at 909-920-3500. Until next time. It's Friday night. Okay.